Okay, let me see on this side. Okay, once it goes to live already, then okay, so now it's live already.
Hi, my name is Roy Goh. I'm from London School of Business and Finance in Singapore. Welcome students from India. Welcome students from Myanmar. Today, we are here to look at the F7 Masterclass. I'm sure you have some materials that's been handed out to you. So let's take a look at what we have. This is the F7 Masterclass. Allow me to introduce myself to you. My name is Roy. My surname is Goh. I have a master degree in finance. I'm a fellow ACCA member. I'm a chartered accountant, and I have an advanced certificate in training and assessment, ACCA. This is by the Singapore government. This is my office email address, rgoh@lsbf.edu.singapore. This is my personal email address. Here, we are talking about F7. For F7, the format of the paper will be as such. By the way, the scripts that has been handed out to you will indicate it is the December. However, the correct date should be June examination. Your F7 exam will be 3 hours and 15 minutes. Now this is important because it allows us to manage our time, such as 3 hours is 180 minutes plus another 15 minutes. Altogether, you will have 195 minutes in an attempt to earn 100 marks. This will give us 1.95 minutes for every 1 mark. We will look at some MCQ tonight. Therefore, every MCQ is 2 marks per multiple choice question. This will allow us 3.9 minutes per multiple choice question for us to do 3 things: 1, 2, and 3. First of all, it is to read the question, to plan your answer, finally to go and write down your answer. Okay? Next, in your F7, to pass, there will be 50 marks to earn. Section A will be 15 multiple choice. Section B, 3 case study between 2 and 3 accounting standards. For every case study, there are 5 multiple choice, altogether 15 marks. Sorry, 15 MCQ, 50 MCQ, 30 MCQs altogether. This 30 multiple choice question of 2 marks each. Then question 31, question 32, it will be a 20 mark question. As usual, you multiply by 1.95 minutes per mark, and you will get over here 39 minutes to do the same 3 things over here. So this is what we call time management. Here, there are 28 accounting standards in your F7 syllabus. The ACCA has commented every year there will be IAS 16 on property, plant, equipment to be tested. So students going for examination, this is a must know. Today we are covering IAS 16 together with IAS 38. So let's take a quick look on what's covered in IAS 16. Then look at IAS 38, followed by one question. Then we finish tonight's session. Property, plant and equipment must be assets purchased for the business own use, directly or indirectly in the generation of income. You must capitalize in the initial cost, purchase cost, specific labor attributable cost, borrowing cost, as well as future cost. But do take note, ladies and gentlemen, that it must be purchase price minus trade discount. You will take 100% of the purchase price. For example, you will minus away 20% trade discount. It will be left with 80% to be capitalized. When we say capitalize, you will debit property, plant, equipment. You will credit either bank if you pay, or otherwise an accounts payable if you owe the suppliers. Next, IAS 16 must capitalize related costs, but accounting standards are not standalone. There's another IAS 23 that will determine that you must capitalize borrowing costs. When you borrow money to build, when you buy an asset and you borrow money, the interest expenses must be capitalized. Next, S7 examiner likes to test students on your present value discounting. And if you calculated a present value of a future restoration cost, you must remember that this is year 0, and at year 1 you must unwind the present value to become the future cost. You will take the discount rate is often the effective interest rate multiplied by the present value at year 0 of the liability. Then it's called unwinding. This is all to calculate the cost. After the initial cost, students must remember IAS 16 has two models, namely cost model and the revaluation model. Cost model, you will take the HC. What's HC? There we go. Historical cost minus the accumulated depreciation. If there's any impairment, minus the impairment, you get a carrying value, carrying amount, net book value, the same. You will next, in the revaluation model, take the fair value from the active market, or you can follow IFRS 13. You will still charge depreciation because it's an asset for your own use, and carrying value. Next, how do we charge depreciation? In our F7, we will often use two methods most of the time: straight line method, reducing balance method. For straight line method, there will be percentages given in the exam, multiplied by the cost price, and over the useful life, you will charge a constant depreciation charge. For reducing balance method, it aims to allocate more depreciation in the early years because the asset is more useful, younger, more efficient, and lesser depreciation to the later years. This percentage is always given to us, but we do not multiply by the cost because that's the straight line method. You will multiply by the carrying value. And what's that? It is to take cost minus accumulated depreciation and impairment. Remember, in the exam, percentages are given. It do not mean in real life it will also be given. In real practice, well, you will have a certain formula to prove that percentage. This will not be tested in your S7 exam. You don't need to know, but just for completeness purposes, the percentage can be calculated. It's just that in the examination, this number is just given to us. Next, your point 4.4 says, when we revise a depreciation charge, either the useful life of the asset gets shortened or change of accounting policy, it must be dealt with using IAS 8, only a prospective treatment, meaning you do not go back and adjust prior years. From now onwards, revised depreciation will be taking the remaining carrying value, or if you are using the revaluation model, the revalue amount divided by the remaining useful life. That will be the new or the revised depreciation charge. Or if you change not the life but the carrying amount, because you change the depreciation method, this is the remaining carrying amount divided by the remaining useful life. Same thing, you must apply IAS 8. It is a prospective treatment starting from the date of change onwards. Prior years is not affected. Next, in your revaluation upwards, because if you are using a revaluation model, there will be an active market to give you the fair value. It is important that you increase or decrease, meaning to adjust your PPE from the historical cost HC to the active market fair value. This will be certain debit. It is also important that you reset accumulated depreciation, reset to $0. It will be another debit. If there's a revaluation upwards, there will be a revaluation reserve, revaluation surplus, say RR. However, if you are tested with a trial balance to adjust to the statements of financial position, statements of profit or loss account, this revaluation reserve will appear in both OCI as well as your SOCE. Students who have seen the trial balance should be familiar with what's OCI, followed by posting to the SOCE. Next, unless there was a previous impairment charge, first you must offset the previous charge, then excess post to a revaluation reserves. This is important, but in your S7 exam, please remember to read the question carefully. Sometimes examiner will require students to transfer from revaluation reserves to retained earnings. Sometimes examiner say do not transfer but do adjust for deferred tax liability. Ladies and gentlemen, read the question clearly for the instructions on your exam. Here, assuming we need to transfer from revaluation reserve to retained earnings, why so? Because a revaluation reserve is created. Secondly, your revised depreciation is more than old depreciation. Quick question, where does the new depreciation come from? Second question, where does the old depreciation come from? Please go back to the earlier page and you will see. This is your old depreciation, original percentage multiplied by the original historical cost. This at the bottom here is your new depreciation, the revalued amount divided by the remaining useful life. So it is now clear that knowledge built upon knowledge. First of all, you take the historical cost divided by the original useful life, and that's before revaluation. And after that, there's a revaluation. You will take the revalued amount divided by the remaining useful life. Now this will give you the new depreciation. Next, the difference, let's call them example $10 minus 8, example 2. You must transfer 2. Remember, this will only appear in the SOCE. Here's the point. In the revaluation reserves, any transfer is purely within the SOCE. It do not get posted to the OCI. However, earlier we have discussed that when you are creating a revaluation reserve, because it's a revaluation upwards, you must post this to the OCI as well as the SOCE. It is important that you be familiar with the accounting standards, because it is how you will show in the financial statements. Next, there could be revaluation upwards equally in your examination. There could also be a revaluation downwards. If it's a revaluation downwards for the first time, you will debit accumulated depreciation again to reset to $0. This is to adjust from the historical cost to the fair value, active market value. However, if there's a previous revaluation upwards, subsequently the asset value goes down, you must first eliminate any existing balance in the RR, excess charge to the P&L. You will still reset the accumulated depreciation to 0, regardless revalue up or down. And here you will still adjust from the historical cost to the fair value, except if there's a previous RR, you have to eliminate that first. So these are all contained in your IAS 16 and their summaries. Until if you turn to paragraph 4.9, the disposal, when you sell an asset, you will need to debit bank, record the proceeds. If you sell the asset, obviously there's no more asset. What do? You must remove the remaining PPE. If you remove that PPE, related to that PPE is also accumulated depreciation. What do? You must also remove the accumulated depreciation. This would known as PPE carrying value, carrying amount. Compared with the amount that you receive, there could be either a gain if it's a credit, remaining balance, or a debit, a loss on disposal. Separately, in the SOCE, but not the OCI, you will transfer remaining RR if there's any revaluation surplus left to the RE. That completes the minimum knowledge that you must possess before you walk into the examination for F7. Next, there's another popular accounting standards. It is your IAS 38. We call intangible asset. Let me finish this standard, then we practice a past year question. I will show you what's the examination technique at the same time. The definition of intangible assets, there must be 4 characteristics to be met in order to be capitalized as a IA. Now, these 4 characteristics are separately identifiable, control must exist, future economic benefits, reliable manager. you will apply the 4 characteristics when company buy intangible asset. What's the keyword? We buy intangible asset. Next, I will come back to the cost model in a while. If you were to briefly turn to paragraph 6.5, there are 6 criteria for us to capitalize. So why are there 4 criteria just now? And why is there 6 criteria here? Because these 6 criteria is applied when the company make, meaning we develop, make our own intangible asset. It's very clear. If you buy, you apply the 4 criteria. Example, you buy a patent, you buy an intellectual property, you buy a design, you buy a know-how, you buy a recipe. You apply the 4 criteria. Then you develop that recipe further, you develop that know-how further, you buy an initial development knowledge, intellectual property, you spend more money to develop it. Then you must ask yourself, do I meet all the 6 criteria here? If so, what do? You capitalize. However, in your F7 exam, the examiner in the case study will not indicate all the 6 criteria for you. What will he say? He say from a certain date onwards, the directors became, one keyword, confident, right? That the intangible asset will generate some probable benefit, inflow of benefits. One word called confident. It is enough to hint to students going for F7 examination that you assume all the 6 criteria are met. Clear? Next, let me bring you back, because I wanted to tell you the difference between when I buy, I apply 4. If I make an intangible asset, I apply 6 criteria. So let's go back to the paragraph 6.1. I hope it is very clear cut. If you buy, you apply 4 characteristics. If you make, you apply 6 characteristics. Next, how do you measure an intangible asset? Like a tangible property, plant, equipment in IAS 16, you can choose to use the cost model, which is to take the historical cost of the intangible asset minus the accumulated amortization, which is the same as depreciation, except depreciation is often used for the word tangible property, plant, equipment. Amortization is often used for intangible asset, but technically speaking, amortization means to spread. To amortize is to spread. Do not get confused between amortized expenses, amortization cost, against the word amortized cost under IFRS 9. See, under IFRS 9, you have 2: financial asset, financial liability. Financial assets, you got 3 ways to measure. The default, fair value through P&L, financial assets. If you buy shares, it could be fair value through other comprehensive income. Otherwise, loans and receivables can be classified as financial asset amortized cost. What do they say? Amortized cost. It's not amortization. Amortization here is the spreading of a cost of asset. What do we call that? We call that depreciation. Spreading under intangible assets. But when you see the word amortized cost when you study IFRS 9, it's a different thing. It is to measure the asset present value and discounting. Likewise, under IFRS 9, there's also financial liability. You shall measure financial liability in 2 ways. Number 1 way, financial liability at fair value through P&L. Secondly, financial liability at amortized cost. Same thing. What's amortized cost? Present value and unwinding. It is important that you understand what is called unwinding what's called discounting. You will be given effective interest rate in the exam. So let's come back to this amortization now. Amortization here, simply a depreciation of an intangible asset. Next, you may use the cost model. Otherwise, you may use the revaluation model. Again, there will be a active market to give us the fair value minus the accumulated amortization. It is exactly like your IAS 16. Next, let's talk about amortization. With a finite useful life means it is a limited useful life. Example, 3 years. What do the company do? You will take amortization to be cost of the intangible asset divided by 3 years of useful life. There we go. If there is indefinite useful life, it means we know that the useful life of intangible asset will end one day. But do you know when? I'm so sorry, you don't know when. If that's the case, you call it indefinite useful life. What do you call it? Impairment test under 36. Let me give you some example. This is called finite useful life. This is called indefinite useful life. This is called infinite useful life. Such a thing? Well, let's take a look. Let's have some light-hearted example. If example, this is a schoolboy like you know, go to school, tells a classmate, tells a girl, say, girl, I love you. Wow, how sweet, right? I love you for 3 years. What would the girl do? The girl shall amortize the boy's love over 3 years. Can it happen? Yes. Girl come from country A. Boy come from country B. Where are they? They are in London School of Business and Finance in Singapore to study S7 with me. As a result, the girl should amortize the boy for 3 years. What do you call it? Finite useful life. What's indefinite? Indefinite means the boy tells the girl, say, girl, I love you. I love you for now. Right? I love you for now. But one day the love will stop. Now that is the definition of indefinite. So would the girl feel sad? Of course. Then the girl will therefore ask the boy, so when will the love stop? The boy say, don't know. And that's called indefinite. What must the girl do? Like all girls, they will learn how to impairment test the boy. That's why, boys, I tell you open secret. You may have a wife, you may have a girlfriend, you may have a young daughter. Regularly, that wife, that girlfriend, that young daughter will ask you, do you still love me? Now that is their way of impairment testing. Okay, jokes aside, there's a thing called finite. We amortize the love, we amortize the asset. There's a indefinite useful life. You will test it for impairment. What about this word, infinite? Well, infinite means the boy tell the girl, I love you forever. It sounds very sweet, right? And all girls would fall for this boy who said, I love you forever, right? But sorry to tell you that no such thing. No such thing in IAS 38. No such thing. Nothing lasts forever. Alright? Either for example, the boy will die first or the girl will die first. Nothing lasts forever. Having said that, this is indefinite useful life. What do we do? Impair test. Finite useful life, what do we do? Amortize. So please, we do not learn love in about IAS 38. This is just an example for you to understand three important words. Finite means limited. Indefinite means the life will end one day. When will it end? I don't know. Example, goodwill. Goodwill, you will sell the subsidiary one day. The subsidiary may lose value one day, but when? You don't know. So on a regular basis, you apply IAS 36 to impair test goodwill. Finish. But nowhere in the accounting standard says the word indefinite. Do not get confused, ladies and gentlemen, between the word finite and the word indefinite, because there is no such word called infinite. Be very clear. When you go for examination, remember, finite, limited, useful life, amortize. Spread the cost over a systematic, either by usage, by hours, by years. It doesn't matter, read the question carefully. Or indefinite useful life, you must test for impairment under 36. Is that clear? Next, you have R&D. Research means to gain new knowledge. What do we do? Expense of. You do not capitalize research. Read the question carefully. R&D. R, we expense of. Must expense of. Next, D stands for development. You have a certain knowledge, you develop, you improve, you enhance that knowledge. What do? You also expense it off. Unless, here we go, you meet all the 6 criteria here. And if you meet all the 6 criteria, you will capitalize, only amortize when the benefit starts to flow. Example, you capitalize when you develop for year 1, for year 2. In year 3, you start to sell the product that you have developed for the last 2 years. In year 3, you will be able to amortize that. When there is no benefits, no sale, no usage, you cannot amortize. So we call this the 6 criteria when you make. So, if you are ready, internally generated intangible assets, example, brand, mastheads, publishing title, customer list, the company shall not recognize as an intangible asset. Let me give you an example. You're all young people. Do you know who owns YouTube? YouTube, very famous, right? Who owns YouTube? Don't know? Google owns YouTube. Do you know who owns Google? Alphabet owns Google. What's that? Google is famous, and you can see this video on YouTube. But YouTube's own brand name, YouTube cannot recognize in its own statements of financial position. No, because it's under IAS 38. What do we call that? We call this internally generated intangible asset. YouTube cannot recognize their own brand name, no matter how famous it is, in their own statements of financial position. You cannot. However, when Google consolidate YouTube, Google shall apply IFRS 3, business combination. When the parent applies IFRS 3, the parent will be able to recognize the subsidiary's brand name if it meets the 4 criteria to be separate and identifiable, contract exists, and so on. So they can recognize the brand name of YouTube as an intangible asset called brand name, YouTube. This is allowed. Understand? Let me show you one more time. Statements of financial position of YouTube. YouTube, famous, intangible asset, brand name, YouTube. Can or cannot recognize? Yes? No, you cannot recognize. Who said so? Internally generated brand name shall not recognize. Accounting standard said so. What's that? Own brand name, own statements of financial position, you cannot recognize. How about the second situation? Second situation. The statement of financial position of Google. Google. Right? Google. Intangible asset, brand name, Google and YouTube. Which one can, which one cannot recognize? Yes, you are right. YouTube can recognize. Own brand name, own statements of financial position, you cannot recognize. Is it very clear? Good. It is not difficult. It all depends on one thing. Depends on who teach. Next. This is a past year question from December 2016. Question 16 to 20 Arthur. Like I said earlier, after we look at two accounting standards, IAS 16, IAS 38, we look at a question. Why? Come to my class, there's two things I need to do. Application and knowledge. First of all, you acquire the knowledge. Then this is the application of that knowledge. If I'm a student going for the examination, I will turn to the question and say, oh, Arthur prepares financial statements to 30th of June every year. Do I start reading from the top to bottom? No. Because why? Information overload, server crash. What's a server? Your mind crashes. What do? Stay calm, take a deep breath, and look at the question first. See what have I done? By looking at the question, I know very clearly I'm being assessed on some calculations of property, plant, equipment. So when I read the case study, I will focus on PPE, IAS 16. Next. I have plant. There we go, plant. Question 1. In question 2, I have suddenly changed the asset to be fixture and fittings. It is still IAS 16 but different assets. Turn again. You do not need to read every word, but roughly you need to know what's happening. Depreciation charge, again IAS 16 for fixture and fittings. Next. In accordance with 38 as you can see. Questions 19, 20. So in this question, have you noticed just by simply flipping through the questions, I would roughly know what the examiner is testing. So what I do, I stay calm, I take a deep breath, I say plant, I search. What do I write down? I write down point 1. It must be for plant. IAS number 16. Do not read in detail, glance through further. What did you notice? Fixture and fittings happens to be the next paragraph. Yes, you are right. Your eyes will automatically look at the next paragraph, which is the last one, and says that research project. Obviously, point 2, obviously, point 3. It is a simple task, but an important technique. What has happened? You simply assess the question as a whole. It allows you to know that point 1 PPE, point 2 PPE IAS 16, but point 1 is on plant, point 2 is on furniture and fittings, point 3 is on IAS 30, it's intangible asset. So it's a very simple technique, but it's a very useful technique. So it stops you from reading note 1 and then note 2 and then note 3. What is that? You will read note 1 and you will pause, think about that, then go to note 2. Let me demonstrate. During the year 2, 30th June 20x5, what did I say? You must read, you must stop, you must think. If you are reading in a hurry, if you are reading in a big chunk, you are not able to think and digest. And now what do? You read again. If you still don't understand, you read again, which is a pure waste of time. What do? Learn from me. During the year 2, June 20x5, it will start from 1st July 20x4 to 30th of June 20x5. What do you call that? Accounting period of 12 months. The company spent 550 on a new plant as follow. Let's take a quick check. As follow. Do you know that if you add everything together, you will still get the same 550? So the 550 has been analyzed in detail over here, and it relates to one new plant. The plant cost, do you capitalize? Yes, you will capitalize the plant cost. Delivery to the site. Yes. How did you know? Well, simple. You come to my class and you learn what is called knowledge plus application. Now, this was knowledge. Now, here is your application. Is that very clear? Good. Built alterations to accommodate the plant. Alterations, if you're not sure, we call them renovations, modifications, upgrade. Do you capitalize? Yes. Cost of initial testing. What if I don't test, I can't use? It's a relevant cost, therefore capitalize. Plant operator training. Operator is called staff, employee, worker, staff. Training, you do not capitalize, instead you expense it off. So in other words, your total capitalized cost will be 550 minus the 8, which is the staff training. You should capitalize 542,000. Next, if you finish this, then furniture fittings. So your mindset is very clear. You know very clearly, first point is plant. After the paragraph of numbers, you go on to read fixtures. It's a separate point, nothing related to the first paragraph, plant. So, Arton fixture fittings were purchased on July 20x2. Stop. What did I say? Read and stop and think what you have just read. Your year ended June x5. How did you know? Question 6 so. And this is July x2. Right? How many years ago? 3 years ago. When I said 3 years ago, the year end is 20x5. That's why 3 years ago. A cost of 50,000. What do you call that? HC. Historical cost, HC. The directors have depreciated them on a straight line basis over an estimated useful life of 8 years. Straight line depreciation, life, useful life, 8 years. 50,000 divided by 8 years, but this was all how long ago? 3 years ago. At July 20x4, interesting, on July 20x4, how long will this be? 1 year ago. The directors realized that the remaining useful life of the fixture is 5 years. The remaining useful life 5 years. And there are no change in the estimated residual value. What did I say? You call up your knowledge. And this is your knowledge. It's all stated in the accounting standard. What's that? Revised depreciation means the new depreciation is to take the remaining amount, no change in the residual value divided by the remaining useful life. So, this is your remaining useful life. Next, Arthur began a research project. It is different from the first 2 paragraphs. In October X3, roughly about 2 years ago, research project with the aim of developing a new type of machine. If successful, Arthur will manufacture the machine and sell them. What's that? Benefits would arise, as well as using them for their own. So benefits in the form of sales and own use. During the year 20x4, 20x4 will be up until last year. So this will be your up to last year, which is 1 year ago. The cost of 25,000 were incurred conducting feasibility studies and some market research. During the year ended this year, current year, this year, a further 80,000 was incurred in constructing, testing. So what's that? Without any questions, all these are just called info. You now know very clearly, first paragraph is plant, second point is furniture, fittings, fixtures and fittings, and finally research and development. Time to look at the MCQ. In accordance with IAS 16, property plant equipment, what's the value of additions to plant? Find the amount that has been capitalized. Ready? Very clear. The answer we know already. Let me show you. Is that 542? Answer MCQ 16D. MCQ 16 answer is D. So this, you already found the answer. D. Question 17, please. Which of the following is true? You are given a choice of 4. One of them is true. Of A, B, C, D, there's only one right. So you must read it carefully. Why? 3 out of 4 times you are reading rubbish, because there's only one right answer. Let's take a look. It is a change in accounting policy which should be retrospectively applied. No, this is wrong. It is a change in estimate. If it's a change in estimate, you should apply it prospectively. True? No, it's wrong already. Obviously, this tests you on IAS 8, which we have seen just now. The change in accounting policy, again, no, it's not a policy. Disclosure, yes, you must disclose, but no, it's not a change in policy. No. C, it's a change in estimate. Yes, that's right, estimate is correct, but it is prospective but not retrospective. So it's a trick question. There are 2 elements to point D, to point C. Estimate is correct, but not the word retrospective. It must be prospective. Retrospective, you go back last year and adjust, but sorry, prospectively only from now, date of change onwards. So, answer is only, you are right, D. Estimate is correct. Prospective, also correct, D. Turn, please. Question 18. In accordance with IAS 16, what is the depreciation charge for fixture and fitting? What must you find? Find the depreciation charge for this year. You ready? Good. Here we have existing furniture and fitting. Historical cost on 1st July X2 comes from 50,000, what do you call that? Balance brought down. And there are depreciation for 2 years until the start of this year. So you depreciate for 2 years with 50,000. The residual value, if you can go back, cost 50, residual value 5, 8 years. This was until 2 years ago before the start of this year. So you will depreciate for 2 years. Here you have 8 years of useful life residual value and depreciate 2 years until the start of this year. This is your remaining carrying value, an amount of 38,750 as at 1st July 20x4. Therefore, from July X2 to July X4, 2 years has gone by. What's next? You must find depreciation for this year, current year. You will take, second step, your revised depreciation for 30th June 20x5. You will take your remaining, top right hand side of the screen, remaining carrying value 38,750 minus the scrap, which do not change, divided by remaining useful life. What did the question say? There we go. The remaining useful life, 5 years. Here we go. Remaining useful life, 5 years. As a result, you will depreciate for 1 year. It will give you 6,750. Answer is D. Very clear. Next, theory. In accordance, question 19 says, with IAS 38, intangible assets, the 25,000 costs incurred on the research during the year should be A, B, C, or D. There's only one choice. What's the keyword now? Research. You learned before, it should be expense in the statements of profit or loss, S or PL. Capitalized, I'm so sorry, that's wrong. Don't need to read on further. Written off to the P&L, this seems to be correct. As their research cost, yes, the whole sentence is correct. That's B. Provide. Provide means like a provision. No, you do not make a provision. You charge it off to the expenses because you will debit SOPL and you will spend money on your research we call credit bank. There's no such thing called provision because why? You have been paid for it. It has been paid for. Capitalized is again wrong. There we go. Answer is B. Last, question 20. In accordance with 38, which of the following is true? Meaning, Among A, B, C, D, only one is true. When Arton moves to production and testing stage of the prototype during the year ended 30th of June 20x5. So if I'm looking for the word true, I advise you by the side, right there, true, yes, no is very clear cut. The project has moved to the development stage. Yes, this is correct. No more research. Development in this year. If the IAS development criteria, one criterion, criteria would be plural, many criteria, just like one child, many children. So there's no such word called criterias, no such word. One criterion, many criteria. So these are the 6 criteria that we're talking about are met. Arden can choose. I'm so sorry. You cannot choose, but instead you must capitalize once all the 6 criteria are met. You cannot choose. So no. So be careful, no? First point correct, second point wrong. Let's continue. It is still in the research, no more. No more in the research. It has, from the question, moved to the development stage. So the rest don't bother to read because first thing wrong, all thing wrong. The whole sentence is wrong. The project has moved to the development stage. Yes. And if IAS 38 development criteria are met, you must. CapEx is the intangible asset, non-current asset. So yes, answer is C. If you are certain that you found the answer, there is no need to read D because you found the answer. Every MCQ there's only one possible answer. You found that. There's no need to read D, but still we will go through because it's in class. The project is still in development. No, in research is wrong. Yes, it's not in research, it's in development. Therefore, although the second part is correct to expense of a research, but it is no longer in research. That's the point. This sentence is not true. We have finished the F7 masterclass. What have I done? I've gone through IAS 38. I've gone through IAS 16. These are 2 important examinable standards in your F7. But please know that there are many other standards that's also related and they're important. I wish you all the best for your F7 June examination, and thank you very much for your time. My name is Roy Goh. I'm from London School of Business and Finance in Singapore. If there's any questions, I will answer the questions now. So I'm looking at the screen to see if there's any questions. Right? If there's no questions for me, good luck, ladies and gentlemen, and I wish you all the best. Thank you very much.